Alright, so in this video I'm going to show you guys how to use the studies that I showed you how to import in my last video. So here we go. We're gonna kind of talk about each one, how they all work together, and then we're gonna go back into a live trading day, and you know what, I'll do that in a separate video. So first, this video is just going to be talking about how the studies work, what you look for before entering and exiting a trade, and how do you get price points and using Fibonacci's. So um, let's talk about them in order of how I would look at them. So if you recall from my last video, I talked about this one down here being the most important, the ProLag MACD at the bottom of the screen. That is, in my opinion, one of the most important indicators or studies that I use in order to engage in trades. So the first thing that I'm looking for is a crossover on here to confirm whether or not I should enter a trade. Now, before I would say, I would look for a crossover, I would need at least 3 indicators telling me I should enter a trade going long or short. First one being the crossover here. So once again, let me just here. I do this because you really want to see these notches and elbows, like right here. See, it's a notch going up, and then all of a sudden you have a cross here, and a distinct cross here, meaning it's not looking good. At the same time, you have a red arrow and the trend line going down. So the cross happens, let's say right here. You can say it's along this candle right here during the shooting star. At this point, you already have the red arrow and the trend line is in the downward position. You have a solid cross form. You can do a market short, market buy and short right here, and you can ride that all the way, until you pretty much have a crossover, which happens right here. So you can, ride that short from here to here. That's what I would say before, but now I trade a little different. So let me show you what I mean by that. So what I just showed you was exactly how I used to trade before, and I wanted to explain that because there's a lot of people in the group that watched my first video and kind of see that, and I still use that similar style but in a different variety. The first thing I want to mention is that the VWAP bands, the upper and lower bands here, are now displayed. Before I would have these blanked out in the back, but now I do display them. And the next thing I want to mention, different from what I did previously than today, is that now I will only enter trades. Now this is the most important thing. Now this is uh, one of the biggest takeaways, I guess you can say, from how I use my studies is I will only enter trades when the arrows and the crossover, my third indicator, appear outside of these bands. If you see what I mean by here, right here, this arrow appeared, I would say it probably appeared right here, because that's when the crossover happened. You're starting to see an upswing in price, and you have this blue candle showing like the reversal to the upside. So what I have here is a crossover. In fact, we can probably see it more defined here, this elbow notch boom crossover. And you can clearly see the crossover happen probably right here. It's a blue candle, you've got a green arrow, it's going up. It's outside of the Bollinger Band. But I say Bollinger Band, but the VWAP band. Now you're probably going, okay, that tells me what do I do then? Me with options now, I do a market buy-in. Now I do a market buy-in, and I kind of just watch the overall trend over here, and I'll, with options, depending on my strike prices and how profitable I am, like right up here, I usually take money off the table when it hits the VWAP, and I'll show you all that in a live example. But for right now, let's just explain the studies. So let's go back to this. So in the beginning, going to the beginning, what I'm looking for first and foremost is I'm actually watching these candles. At the beginning of the bell is when you have the most reactions to stocks, and what I mean by that is if it's gonna skyrocket, it's gonna do it right at the bell, or if it's gonna dip, it's gonna pretty much do it right at the bell. You have a lot of retail trading that opens up at the bell. You have a lot of we call them Robin Hooders, so to say, that you can only trade during live hours. There's no pre-market for them, so you have a lot more action that when ding 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 this time hits, you see a lot more volume, and not only that, but the what I like to believe is the algos kick on. You know, the algorithms, robotic trading for the hedge funds and analysis and etc. But with all that being said, so I'm watching these candles. So if I did this live, in fact, let me see, we're in on demand, so I can do this live. Let's go back to this is going to be 9:30 to 9:45. So what I'm going to do is I'm actually going to go back in time, and I'm going to show you guys what I would do on this particular trade and how I would draw a Fibonacci. So a Fibonacci before, so make sure I went over all the studies real quick, how I use it before I go into. I told you guys that I look for the crossover first. When this crossover happens, I need to have either a arrow that's telling me to go long or a arrow that's telling me to go short. In combination with this is the zigzag, the trend. I think I made this in the last video with dots, so let me change that. I think I did dots, and so you guys all can keep it consistent. So these are the dots. You want those dots to be in a upward or downward momentum of whatever your trade is going to. So I have a crossover, I have a blue that's signifying a reversal to the upside, and I have my green arrow, which is outside of the band. I would be entering this trade. Now you'd probably be asking, well, I need price points and everything, right? Well, let me show you how I get those price points. It's a magical tool called Fibonacci's, and what you do is you come over here and you click on right here, which is this percent with the bar graph behind it, which is called a Fibonacci extension, and that's what these boxes are for. So when you're going long, like as you're trading in the live trading day, everything to the right of my pointer, let's say if I'm entering the market, entering right here, everything to the right of my cursor right here, you don't see. It's still in the future, right? So all you see is what's behind us. But what we do know is we have a green arrow, we have a blue, and we have a crossover. We know we want to enter, right? So now what I'm doing is options plays. But if you're doing stocks, and let's say for example a stock is already skyrocketed and this is already built, you can do what's called a Fibonacci extension. This will give you price targets. So for this one, I would do this right here. I would click on this box to start, because that's right behind the green arrow, and then over here there's the other box, which is the last red arrow or the defined slope. Click it again and then bring it back down to right here. Then I right click on this, I edit my properties, because 61.8 is what I call the retracement, 161.8 is the target, the money spot. So sometime today this price should hit 170.82. Now we're determining this when? Right here. Right here at 9:48 in the morning, when the price is 169, we're going to say at some time in the day it's going to be at 170.82, right? I'm using this on a blue chip stock for Facebook. When I do my live example, I'll explain to you how this all works. So once again, I am repeating my studies to you that these candles, colors in the candles are just a confirming indicator. They don't mean much. So the ones that really mean much are these pro lag MACD at the bottom, that one right here. Like I said, you kind of want to watch for these crossovers right here, and make that's like the first thing you want to watch for. And like I said, you want to make sure you want to confirm it with things like this where you have the red arrow. You need that, that's critical. And things like this where you see a reversal to the upside. So if you have a green arrow, I mean I said red arrow, but a green arrow and a reversal to the upside, and you have a crossover down bottom, those are three indicators. But another major one is this trend line. You see that it's green and it's going up. Well, on live trading day, it's not necessarily green. It might be orange, but it's trending up. It's not trending like sideways or down. It's actually trending up in a live trading day. Those are one indicator, which is down there, the MACD. Two, this is the three. Oh, actually, three would be the trend line right here. And then the fourth, which is like pretty much the guarantee, is that color right there. So once again, MACD down bottom, crossover. Look for the arrow. Oh, I forgot to mention. Look for the arrow outside of band. Sorry, typing with the mouse. Outside of these, you will get arrows inside of these. Now, they're not based upon my practicing and studying for the past, I don't know, 2.5, 3 months of doing this. my level of consistency of the probability of the trades coming in my favor have been magical on intraday charts when I'm going outside of these bands. Now, there's not much profit to be made in terms of actual dollar volume or dollar spreads in terms of these common stocks because most of them are blue chip because blue chip, meaning the major companies on the stock market, I advise only trading with those because of what we call liquidity. You need a stock market. You only make money when the stock is moving. If whether it's moving up or moving down, you make money. There's no doubt about it. In other words, if a stock is going down, you can hopefully have a broker that you can short from. Some brokers, if stock is crashing, there might not be shares to short, but if you know when to short and get ahead of everyone, then you should be able to capture some of those shares to short. So, but the vice versa on the upside. So whenever a stock is going up, obviously you can always pretty much buy a stock if you want to pay the right, whatever the asking price is. But when a stock is not doing anything, meaning that the bid and the ask price. So let me show you what I mean by that. The bid, which is what people are willing to pay, and this is what people are willing to sell for. If the spread on those are too high and nobody's willing to pay the ask and nobody's willing to come down to the bid price, that means it's trading sideways. In other words, there's no movement, there's no liquidity. When that happens, it's dangerous. I don't like that. I mean, the only time you want to be in something like that is if you truly believe in the company or you know something's going to be coming in the short to midterm that you feel that is going to be a great movement to the stock price. Otherwise, get the heck out. I mean, there's you don't want to be in a stock that doesn't have movement. So that's why if you hear me ever post, oh, there's no volume or if volume dries up, that's what I'm referring to. Because I cannot not have volume. If volume dries up, then guess what? It's not good. That's not good at all. So, with all that being said, let me try to draw my. I thought I drew Fibonacci's. So with these Fibonacci's, it said we would hit 170.82. It's at 170.67 high of the day right there. And we're still at 944.54. So, but this, wow, I drew my Fibonacci like a trading day before, so this would not be accurate. It didn't truly hit that Fibonacci target, but when got close to 170.67, isn't close in my opinion. Talking about blue chip stocks with the option spreads, um, didn't quite work in our favor. It looks like. I mean, we would have made some money, but not what I would have liked. So that's pretty much what I wanted to show you guys about how I use these, um, in a live trading day. So I once again just want to mention that to me, these crossovers are the first indicators of when to enter a trade, and followed by a arrow showing up outside of the VWAP band up here or up here, and once you see this arrow, the crossover, and a third indicator between the color of the reversal candle, whether it be blue for long and yellow for short, and a trend signal going in your direction, I mean, you can literally buy contracts right here as long as the spread is short, which I'll show you guys in the next live trading video. But as long as the spread isn't, a lot of people say 10 cents, but I don't like going that high. But the spread being 5 cents on the contract, you buy it here. I mean, you can ride it up to here and still make a significant amount of money. But even though the VWAP is telling you, I mean, the VWAP, the Fibonacci is telling you it's going to at some point hit 170.82, you can hold on to that contract and ride it. Boom, look, right through the VWAP, come back down. I usually take money off the table just to make sure I'm locking in profit. But it's pretty spot on. And I mean, I'm gonna show you, like I said, a live trading example, and get rid of level 2. So if we just go back through this trading day, 12 drawings, Okay, this would be the first arrow I seen. So I would have probably, let's say you're not doing options, right? You would have seen a crossover here. It would have been outside the VWAP. Well, I shouldn't say outside the VWAP. You would have seen the crossover. It could have been like right here, for example, but the arrow would have showed up outside the VWAP. If you're just trading stocks, I would market buy in. So what I mean by that is this. So you have this button over here called trade, right? So you can go to trade. Let's say you already know what stock you're looking at. You should, as a trader, already have certain, you know, predetermined. Like for example, I have $1,000 in capital I'm working with. That means I can only buy 10 shares. So I would go 10 shares, like auto send, and I would do market. And what I mean by that is this. So now what happens is this. I have this trade button. What that does is it brings up these buttons over here. Buy market buttons and sell market buttons. It brings those up. The little arrow to the left of it brings down how you want to do it. Fill these out in advance saying, okay, this is what I want my position to be. If you're starting a bigger position and you want to be in it for a little bit of a longer haul, scale yourself in. Like, don't take all of your money and buy it in, because what if it dips? You can average down. Sometimes not everything happens. Let's say in the middle of a trading day, news breaks. There's Facebook's biggest competition. I don't know who, Twitter, let's just say, merges with Google or something. That's not good news for Facebook. You probably, if you have call options, probably want to start dumping them, because they start dropping just on that news. You're going to be out a lot of money. I say a lot, I mean a lot of money, because the leverage on options is deadly. So this style of trading involves you to be watching this computer screen in front of you all at any given time. It's not something you enter and walk away from. So once again, you can do a market buy-in. So if we're just trading stocks, not options, you can just do a market buy-in, ride this up. Now, VWAPs and the exponential legacy moving averages are natural forms of either support or resistance. When those are broken, um, then you kind of want to start taking things off the table or continue to ride it up. Now, here's something else that I didn't mention yet, but is very critical. You see right here that it's going up, and then you get an arrow, and if you actually zoom in, it crosses over. So you probably are like, oh man, I should get out of this position. I would not have, and I'll explain why. If I pull up the 10-minute chart right here, the 10 minutes chart is still bullish. And let me show you what I mean. So this is the 1-minute chart, and this time frame is between 9:50, 9:10, and 9:50, 9:10. It started at the, what is that, the 160.26. Oh, there's a 10-minute mark. So if you go to the 10-minute mark, you can see that on the 10-minute mark, you're about to see a crossover to the bullish side. So to me, I would not exit this. Not only that, but you're starting to see the sequence counter 1, 2, 3. This is where the sequence counter kind of comes in. It's going to go 1, 2, 3, 4, 5, 6, 7, 8, and it usually goes to 9. So because you're seeing this on the 10-minute chart, the overall trend looks bullish. Now, it's not confirmed. I do want you guys to keep that in mind, that because if you look and you zoom in really, really deep, it's not actually crossed over, but it's on the verge to, is what I'm saying. And I mean, you really have to zoom in to see how close it is to being crossing over. Otherwise, I mean, that about to be a imminent crossover. So to me, and you got these 3 green candles in a row, so to me it is considered to be in an overall bullish trend. The reason I wanted to show you that is because if we go back to the 1-minute chart, remember we had the market buy in right here. You guys probably remember. Oops. like this. Had the market buy in. This is the live trading day, I think. Yeah. And then you would have had a sell signal right here, and here it shows a crossover. But remember, on the overall, it's still going green. Even though you have this, watch, it's probably gonna. This is just it's replaying October 5th at 9:52. This is gonna bounce off the VWAP right here. Even though you see a red, see a trend line down, and you see this. These are three indicators. It's telling you, yeah, you should go short. But with the overall 10-minute chart telling you it's still in an upward swing, this should just keep bouncing off the VWAP until it goes back up. So that's how I use these studies. The last part I wanted to show you is that I use the 10-minute chart to confirm the 1-minute chart. So, alright guys, I'm gonna go ahead and start uploading this video. If you have any questions, just post in the group. Alright guys, thanks.